Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property. Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there and age, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back.
Hey everyone, so I'm actually going to give you a two-part video today because I've made you wait long enough. So today we're going to talk about the company that I actually did end up buying as I got rid of ADM, which was Archer and Daniels. I got rid of Sony stock. I also got rid of PepsiCo. Now, what was the company that I ended up purchasing? We're going to get into that as well. But I also want to highlight a bonus for you, which I was going to save for another video. But because you've all been so patient, I'm going to give you that bonus today. And it's a company that I believe everyone should have right now. Now, I'm not your financial advisor. I'm just an average guy on YouTube. And I do want to make a full disclaimer. This stock that I'm going to say that everyone should have right now, I have not purchased. And I'm going to tell you why in just a minute. All right. So the company that I ended up purchasing is actually going to shock everyone. It is Google A or Google C, whichever one was cheaper at the time. I got that one. Now, everyone will say, why would you purchase Google? They don't pay a dividend. And that's actually incorrect. The Google Corp that I actually purchased does pay a dividend. Now, on Robinhood, it shows a 0.12% dividend. But on the current brokerage that I use, it shows a 0.49% dividend. So I don't know which one is more accurate. Let's actually go ahead and use good old Google to figure out which one is more accurate. Google dividend yield. All right, and it shows that the dividend yield is actually going to be 0.48%. So I guess that one is the more accurate one. And I'm happy about that. I'm not happy that it's so low because it actually lowers the position in my entire portfolio. As you guys know, my portfolio was at 1.78% dividend yield prior to me deleting these three companies. But now that I added Google into the mix, it is now trading at 1.68% after all expenses. My expense ratio is 0.03%, and that's already been added to it. So basically, my dividend yield is 1.71%, but I like to just say after expenses, so I always give you the dividend yield after expenses. So technically, my dividend yield is 1.71%, but my actual profit on the dividend yield is 1.68%. So I always go with the 1.68% number. You guys let me know if you would prefer me to use my before expense number or my after expense number, because I don't want to feel like I'm lying to my my audience. But I use the after expenses number. I just think that that is more accurate, I guess. Because I do have some ETFs, and Google Inc. Class C would be an ETF. So they do have an expense ratio. I didn't even look at the expense ratio, but I'm assuming they have an expense ratio. Let me see here. It's ironic, right? You invested in something and you didn't look at the expense ratio. I just believe in the company. I've been seeing it all of my life. And, you know, it was about time. Let me see, expense ratio. Slower revenue growth. All right, so the expense ratio, to go over this Google asset, free cash flow. I don't know why the expense ratio is so hard to find on here. It's actually not showing at this time for the 2020 for the fiscal year ending 12/31 of 2023. So I don't want to assume that there is none, but Alphabet is a tricky fella because right now it's showing me the ticker symbol GOOG, which is not accurate for what I got. I got GOOGL for the ticker symbol. Now, for anyone who doesn't know what a ticker symbol is what you use to identify a company. So, for example, if you're looking at Meta, you're going to type in Meta ticker symbol and you'll see what the stock is listed under, or Tesla ticker symbol and you'll see what the stock is listed under. So if you ever want to know what the expense ratio is for a ETF, which is an exchange traded fund, you'll be able to see that based on their ticker symbol, based by looking up their ticker symbol and then looking up their expense ratio. So I'm looking at GOOGL. Revenue looks good at $23.62 billion. That's amazing. But when I'm looking for that expense ratio, I don't want to jump the gun and say it's not listed here. But yeah, it's not listed here. It's not listed on this platform. So I have to say that GOOGL does not have an expense ratio. And for the small dividend that they pay, I'm happy that they don't, because, that would just be another blow and probably would be a reason to sell, to be honest, depending on how high the expense ratio is. I obviously didn't buy GOOGL because of their dividends, right? I bought it because of the growth of the company. I bought it because I believe in it. I bought it because I use it every day. I bought it because I believe in their future. And let's also look at their 1 year is up 20%, 20.69 to be exact. Their 5 year is up 177.92%. This is the type of stuff that I tell you guys to look for when you're, evaluating the company. And then their all-time, they're up $491.37. Sorry, 491.37%. That is $137.19 increase from 165.11, in which it is at right now. So if I had Google all time since 2014, I would have more than quadrupled my money. I would most likely be a multi-millionaire just having invested in this alone. So again, this is why you want companies like this for the long term, because you already know that you're going to be golden for years to come, and they're not going anywhere. This is the first time that I've had to see Google really adapt to a changing environment such as AI. I'm pretty sure that you guys are accustomed to that if you're a little older with the .com era. But this is the first time in my experience that I've actually had to see Google adapt, learn, and maneuver, and start to integrate AI into everyday life and really try and be first in people's minds. Because that's the biggest thing about advertising, is being the first in people's minds. Normally, the first person to market is not the first in everyone's mind. And so Google is really trying to make it seem as though they're the ones who came up with AI in the first place. And it is working. A lot of people don't even talk about ChatGPT anymore. And most youngsters aren't going to know what ChatGPT is. They'll say, oh, Google's been doing this forever. And so now let's talk about a company that I actually am starting to believe in. And it's so funny because Warren Buffett kind of touched on this already. And I was saying, he's absolutely wrong. You shouldn't invest in this stuff, but I'm going to look into it anyway. And if anybody watched that video, you know exactly what I'm talking about, and it's insurance companies. What insurance company, Festus? What insurance company are you talking about? And the insurance company that I'm talking about that has blown my mind is AllState. AllState is phenomenal. I'm looking at AllState and I am just like, I gotta have me some AllState. It is on my watch list. I am praying it goes down in value just a little bit so I can get a good discount before I buy in. Now, you heard it here first. AllState. In the last 52 weeks, they went from $105.85 to $189.26. In fact, at the time that I'm making this video, they're currently at $188.94. They're breaking records. They're on new highs every single day. AllState is performing at a massive clip. And the problem is, when we were talking about the high cost of insurance and how insurance is getting more costly and more costly and more costly because cars are getting more pricey and more pricey, no one thought about investing in the stocks, or at least I didn't. Now, I'm sure that there are some investors, obviously, that knew what to do. I don't know how I missed this. It is my fault, guys. I'm so sorry. Like, how did I miss that AllState was an amazing buy this year and last year? Like, where I'm just now noticing that I missed the boat on AllState. And I'm just hoping that it goes to like 160. Maybe I'll even buy it at 170. But I need to get in on this. I really do. Now, is AllState going to continue to run it up? I do believe AllState is going to reach $200 by mid-2025. But I'm just praying that it goes down a little bit before they go up. I'm praying they go down just a little bit before they go up so that I can get in on that before they hit $200, because they will break $200. And that's going to be a $12 profit even if I bought right now. So that's $12 in growth, buying for less than $200 right now. If you put $2,000 into AllState right now, you can buy about 12 shares of AllState that are all going to be times by 12, which is $144 in growth on your $2,000. And then you're also getting a dividend payout of 1.95%, almost 2% on your money on top of the growth. Insane. And then people wonder why I always make more than 11% profit year over year. Is because I identify companies like this that I know are going to be really, really good. Now, the reason why I didn't buy AllState is because they just reached a new high, which means two things can happen. They can break it the next day, which is not even Labor Day yet. So on that Tuesday, I'm going to figure out whether or not they broke it. You guys are going to be seeing this late, so you're already going to see what AllState is doing. But if they go down from their high, which is less likely, to be honest, because the stock market is good about breaking records. They're good about breaking records. So I do expect AllState to go up from 188. But I will again be watching. I want to see it go down a bit. There are going to be some headwinds for AllState that people are not considering right now. The car market is in shambles. Prices of vehicles are going down. The cost of these vehicles are going down, which means their insurance premiums are also going to go down. If people can't afford more expensive cars, they'll trade it in for cheaper cars, which means their insurance premiums will go down. AllState has been making tremendous profits due to an economy that has incentivized very, very low interest rates. Now, if and only if these people took out decent interest rates on their vehicles, they won't have to sell, and therefore they'll be able to continue to pay their premiums. But if they have an adjustable interest rate on these vehicles, which is not very likely, most car manufacturers do 5 to 7 year fixed terms. But if it is adjustable, or if they just lose their job, they're not going to be able to afford these payments. The average person is paying over $800 a month in vehicle payments alone, not to talk about insurance premiums. And, there's a lot of states that require you to have car insurance. And that is really the main reason why most people have it. I can promise you that if my state didn't require me to have car insurance, I wouldn't. But I'm not going to knock it that they do require it. It's just a part of the game, so I play it. But that's all in AllState's favor. It's all in AllState's favor. So right now, there are some negatives that can come, but the positives outweigh the negatives in my case. I love their dividends. I just wish I could get in at a cheaper number. I'm greedy, guys. I want more skin in the game. I wish I was Warren Buffett. I would just call them up and say, hey, I need a 20% reduction on this, and I'm going to put in $20 million into your company. But unfortunately, I don't have that type of capital, and I just have to invest like everybody else. So hopefully I can see even 180. I would get in at 180. And I would ride that all the way to the top. I do believe that AllState is going to be a $200 company very, very soon, and I want to get in on that as soon as possible. So it is on my watch list. I hope you guys enjoyed that bonus. I hope you guys enjoyed the new stock that I added to my portfolio, and I can't wait to catch you all in the next one. So I will see you on the next one. I post every single day at 8 a.m. daily on YouTube, Rumble, and Spotify for podcasters. Peace.